Forget everything you thought you knew about the AI stock boom. Because while NVIDIA continues to dominate headlines, something unexpected has been happening behind the scenes, and a few under-the-radar companies have been quietly crushing its performance. These aren't the usual chip designers trying to take NVIDIA's throne. They're the companies building the physical and digital backbone that makes artificial intelligence even possible. The engineers, the network architects, the toolmakers of the AI revolution. In today's video, we're going into 3 surprising stocks that have completely outperformed NVIDIA in 2025. Not by designing faster GPUs, but by building the world that AI runs on. Let's get into it. When you think about the AI boom, the first name that pops up is obviously NVIDIA. It's the company that turned graphics cards into supercomputers and fueled the entire generative AI explosion. But in 2025, something wild happened. NVIDIA wasn't the biggest winner anymore. While everyone was watching AI chip launches, a few overlooked companies started posting returns that made even NVIDIA look slow. We're talking triple-digit gains over 100%, 120%, even 126% year-to-date, all from businesses you might not think of as AI stocks at all. Here's the twist. These companies don't compete with NVIDIA. They support it. They build the data centers where AI lives, the chips that connect it all, and the machines that make those chips in the first place. They're the true picks and shovels of this digital gold rush. And as history shows, during every major boom, it's often the people selling the picks and shovels who make the most consistent money. Let's start with the most unexpected winner of them all. Comfort Systems USA. Ticker FIX. Now, when you think of AI infrastructure, you probably imagine servers, GPUs, or fiber networks. But the first step of every AI data center is far more basic. It's the building itself. And that's where Comfort Systems USA, ticker FIX, comes in. This company is one of the largest mechanical and electrical contractors in the United States. Their teams design and install the air conditioning, ventilation, and electrical systems that massive data centers need to keep thousands of AI chips cool and running nonstop. But here's something many investors overlook. AI computing produces enormous heat. Each rack of GPUs can consume as much power as dozens of homes. That means companies like Comfort Systems are now in insane demand, not just from tech giants, but from the contractors racing to build these massive AI facilities. The results speak for themselves. In 2025, FIX has delivered a 126% return year-to-date, compared to just 15% for the S&P 500. The stock has been on a stunning run, and at around $950 per share, it's becoming one of the best-performing industrial names in the entire market. And this isn't a short-term story. Comfort Systems has quietly been on a 5-year tear, up more than 2,000% since 2020. That's right. A company that builds heating and cooling systems has outperformed nearly every tech giant of the decade. Their secret? Their project backlog has exploded thanks to AI data center demand. In their latest quarterly report, they posted record revenue and announced a dividend increase to 60 cents per share, a direct reflection of how much cash flow this boom is generating. Here's the twist. FIX isn't even a tech stock. It's an industrial company, yet it's become one of the purest plays on AI's physical growth. While NVIDIA sells the silicon, Comfort Systems sells the steel, the pipes, and the cooling systems that make AI possible in the real world. They're literally building the foundation of artificial intelligence. Next up is Broadcom, ticker AVGO, a company that's become an absolute monster in the AI ecosystem, and yet it still doesn't get the hype it deserves. Broadcom's 1-year return sits at roughly 119%, absolutely crushing the broader market. Its shares trade around $370, and the company just posted a record-breaking $16 billion in quarterly revenue, up 22% year-over-year. So what's driving this surge? Broadcom isn't designing general-purpose GPUs like NVIDIA. Instead, it focuses on custom chips and networking hardware, the behind-the-scenes components that allow massive AI clusters to communicate at lightning speed. Every time a large language model runs across thousands of GPUs, it depends on ultra-fast networking, and Broadcom's silicon handles much of that traffic. In fact, AI semiconductor chips now make up the majority of Broadcom's total semiconductor revenue. But there's a recent development that set Broadcom stock into overdrive. a massive partnership with OpenAI. Analysts estimate this deal could generate $150 to $200 billion in total lifetime revenue for Broadcom, as OpenAI looks to design its own custom AI accelerators rather than relying solely on NVIDIA hardware. That's a staggering number, and it shows how deeply embedded Broadcom is in the AI supply chain. But there's more. Broadcom has built up a backlog worth over $100 billion, much of it tied to AI-related orders. That gives the company visibility into future revenues that few tech companies can match. In short, Broadcom isn't chasing hype. It's quietly powering the infrastructure of AI, from data center interconnects to the chips that handle communication between servers. If NVIDIA builds the brain, Broadcom builds the nervous system that connects those brains together. Finally, we have Lam Research, ticker LRCX, the company that builds the machines that make the chips. Lam Research is one of the most important and least understood plays in the semiconductor ecosystem. It doesn't produce the chips itself. Instead, it produces the etching and deposition equipment that chip makers like TSMC, Samsung, and Intel use to manufacture the world's most advanced semiconductors. In other words, Lam sells the tools that companies like NVIDIA and AMD need to bring their designs to life. And in 2025, that business has been booming. Lam's year-to-date return sits at about 117%, more than 7 times higher than the S&P 500. The stock trades around $155, and the company recently reported September quarter sales of $5.3 billion, up 21% from a year earlier. Those results were fueled by the same AI frenzy driving the rest of the industry. Chip makers are racing to expand capacity for advanced AI processors, and Lam's equipment is at the center of that expansion. Its operating margins remain extremely strong thanks to its leadership in etch technology, which is crucial for producing the complex microscopic patterns that define modern AI chips. Here's what makes Lam special. It doesn't matter who wins the design war – NVIDIA, AMD, Intel, or even Broadcom. They all need Lam's research tools to manufacture their chips. That's what makes it one of the most reliable long-term plays in the entire semiconductor ecosystem. Lam Research is the ultimate picks and shovel stock, a business that profits from every stage of the AI gold rush, regardless of which chip designer takes the crown. So let's take a step back for a second and look at the numbers side by side. In 2025, Comfort Systems USA, FIX, is up 126%, building the physical infrastructure of AI. Broadcom, AVGO, is up about 55% year-to-date, powering the networking and custom chip revolution. Lam Research, LRCX, is up 117%, supplying the tools that make the chips possible. Meanwhile, the S&P 500 has gained just 15%. That's not a small gap. It's a complete domination. But before anyone rushes to hit the buy button, there's a for now reality check we need to talk about. First, valuations. After such explosive runs, these stocks aren't cheap. Comfort Systems trades at a price-to-earnings ratio of around 40, which is high for an industrial name. Lam Research also trades at a premium to some analysts' fair value estimates. Then there's concentration risk. FIX's growth is heavily tied to AI data center construction. If that boom slows, its backlog could shrink quickly. Broadcom's growth, meanwhile, depends heavily on a handful of major clients, including OpenAI, so a delay or pullback in those contracts could weigh on its outlook. And finally, cyclicality. Semiconductor equipment makers like Lam Research are exposed to industry cycles. When chip demand cools, equipment orders often do too. Add in geopolitical factors like US-China trade tensions, and the risk side becomes clear. In other words, these companies are crushing NVIDIA for now. But markets move in cycles, and what's hot today can cool off tomorrow. That said, the long-term trend, the one driving all of this, is undeniable. AI isn't slowing down. So what's the real takeaway? The biggest gains in the AI boom aren't always where the spotlight shines. While NVIDIA dominates the headlines, companies like Comfort Systems, Broadcom, and Lam Research are powering the entire ecosystem, building the infrastructure that keeps AI running. For now, they're the ones quietly crushing NVIDIA in performance. And that's the real insight here. The smartest plays aren't often in the hype, but in the backbone behind it all. Which of these picks and shovel stocks do you find most compelling? The builders, the networkers, or the toolmakers? Let me know in the comments, and don't forget to like, share, and subscribe to Elite Trade Club for more insights like this.